KVB PRIME, developed for global traders, growing together with you.
Okay, welcome to this week's KVB Prime weekly market commentary. Before we're able to start, let's have a look at the risk disclaimer first. The content contained does not construe any form of advice, and the user must not take this as such. We do not accept any liability for the direct or indirect usage of the content held in the article. We strongly recognize and advise that you obtain independent financial and legal tax advice before proceeding with any currency or spot metal trades. Okay, let's start our topic for today. Last week's US stock adjusted US dollar currencies rebounded. The GDP in the second quarter is likely to have the largest quarterly decline since the record. The unemployment rate in the United States will be about 9% by the end of 2020. On Tuesday night, the Fed Chairman Powell reiterated that he would keep interest rate near zero until the economy is back on track, saying that the US economy outlook is full of uncertainty. He pointed out that some economic indicators shows the economic activity is stabilizing and even suggest that the economy will rebound moderately. But the output and the employment levels are still far below the level before the pandemic. There's still a long way to recover. Powell also said in a testimony in the House of Representatives that the Fed's landmark corporate bond purchase plan will eventually mainly involve a corporate bond, not corporate bond ETF. In terms of sales figures, according to the U.S. Department of Commerce, retail sales in May soared 17% from the previous month, much better than a market expectation of 8.4%, breaking the historical record, the highest increase since the data began in 1992. At the same time, it also ended 3 consecutive months of decline in retail sales. The April retail sales data was revised down by 14.7%. Okay. The Bank of England is widely expected to expand the quantitative easing program by £100 billion, taking a total of £745 billion. In regards to interest rate, BOE governor said the bank would contemporarily go into negative territory for the first time, but the review will take time. On the flip side, the UK retail sales partly recovered in May, increasing by 12% in comparison with the record fall seen in April. Last Friday, European leaders began negotiation on the €750 billion rescue project to help Euro economy recover from the COVID-19 lockdowns, with Germany and France calling an agreement before the summer break. Australia employment rate advanced to 7.1% from 6.4% in April, and employment plunged by 227,000 in May after falling 607,000 in prior months. However, these figures excluded hundreds and thousands of people who have given up looking for jobs or who haven't been stood down on JobKeeper payment. Thus, the retail situation may be worse. Okay, let's have a look at the weekly movement. The US dollar index up by 0.82%, the euro down 1.07%, the pound down 2%, Aussie dollar down 0.29%, gold up by 0.97%, US crude oil up 12%, and the Brent oil up by 10% respectively. The Dow Jones and SP and 500 down 1.63% and 1.72% respectively. Let's share some ideas and strategies ongoing for this week's. Let's have a look at the US dollar currencies first. The USDX, the rebound continues for a week and a half in a volatile ascending movement, gradually out of the support and resistance of ascending channel. The local high 97.7 for the rise is currently an important daily resistance. If it cannot break through 97.9, this wave of rise will come to an end. Once it starts to decline, the previous low 97.5 will be an important support. After breaking through, it will open a further trend of shorting and cannot be extricated and goes further and further in the rhythm of shorts. Next one, euro dollar. The euro seems to form a trend in the adjustment of the nearly 2 weeks of a decline. However, there's no rapid descending trend. It is basically a decrease by 2 to 3 bearish candles with a bullish candles inside. The current lowest price 1.1160 in the previous period is a good reference for support. If it broke below this position, it will have more room for decline. On the contrary, the 1.1219 above also acts as the near-term head resistance. Once the continuous rebound rises above 1.1290, traders should pay attention to the bull market to continue to exert strength and participate with caution. Okay, let's talk about sterling. The pound is also continuously oscillating in a descending trend and currently finding enough support about the 6-day moving average on the daily chart. Observe whether the following support position at 1.2330 cannot be broken through. Once the position is broken through, it will have a greater possibility of continuing to decline. On the contrary, if it stands above the 60-day moving average, the pound can break through the resistance at 1.292590. There will be a better chance of sustaining a rebound when US dollar index is not strong overall. See if the pounds can get support at this position or after falling below any important support position, it will be weaker. Okay, last one is gold. Gold has been unfolding in our prediction. Repeated high and a low oscillation has been the theme for the past 2 months. The support of 1711 remains very good now. If it does not fall below 1711, the resistance above 1763 will accept the bull's next challenge at any time. Once this group is broken through, the next bull target is at 1804. The breakthrough is in this position will receive great attention from the market. The support at 1668 also plays an important role in important daily level for nearly 2 months, which can be imaged to be relatively solid. That's all about today. Thank you for watching.